So good morning, everyone, and good afternoon, everyone from the West Coast. This is Orrick's Total Access webinar in August. Thank you very much for everyone for coming. Next slide, please. Okay, so today's topic, we'll talk about CVC in Japan, what you need to know, current status, issues, and future outlook. Next slide, please. Before we get into, introduce our presenters today, let me briefly give an overview of our firm, because I understand that many people are actually listening to this Orrick webinar series for the first time. So Orrick is a global law firm, which actually originated from San Francisco. And we have currently have 26 offices globally with 1,100 lawyers. And one of the, our strengths is in the focus on the tech and life science. So, and also venture, practice. So I think we can say we're the only one, venture focused firm, both from the entrepreneur side and also investor side, globally, not only in the US, but also Europe and Asia. So, from Japan, not only, the entrepreneurs, we represent a lot of, investor side clients, including CVCs, which include, some of the panelists today. With that, we have a great presenters today and from our clients. So let me give a brief introduction. So first presenters are Fumiko Uraki-san from Mitsubishi Chemical. Uraki-san, konnichiwa. Ohayou gozaimasu. So he leads the corporate venture practice from Mitsubishi Chemical Holdings. So she will give a more detailed introduction afterwards. And then also another presenter, Nicolas Sauvage. Hi, Nicolas. Good morning or good afternoon. So he's a president of TDK Ventures. So he leads TDK's CVC practice. So next slide, please. And today's presentation will consist of two parts. So first part will be the presentation from each Mitsubishi Chemical and the TDK Venture to go give you the overview of the activities. And second part is going to be a kind of panel discussion, which will be moderated by Joseph Perkins, our partner based in Silicon Valley. Hi, good morning, Joseph, or good afternoon. Can wave? Yep. And myself, Hiroki Sugita, partner from Tokyo office. Next slide, please. So before getting into the main session, I would like to give you some kind of housekeeping matters. So first, please note that participants other than the speakers will be muted during this session. And secondly, especially once you get into the panel discussion, please feel free to ask any questions using the Q&A button on the bottom of your screen to ask questions. You can just type. You can type in either in English or Japanese. We try to pick it up and can bring those questions during the presentations. We will try to answer those questions towards the end of the panels. Okay, next slide, please. Okay, with that, I'd like to turn to the Uraki-san from Mitsubishi Chemical. So, Fumiko-san, it's on floor.
Yeah, thank you very much, and thank you for your kind introduction, Hiroki-san. Good morning and good afternoon. I'm very happy to join today's session with great panelists and participants. I'm Fumiko Uraki, and I have been working in CVC world and also combination with new business development in the last 13 years. And I learned a lot being in the intersection of corporates and startups. This is can you go to the next slide, please? Yeah, this is a glance of our company group. We are one of the largest chemical and life science company group in Japan, covering chemical, pharma, and industrial gases. Next slide, please. And I'm leading the corporate venture arm of Mitsubishi Chemical Holding Group. And our activity as CVC is incorporated in our company's long-term growth strategy and positioned as shown in the small blue box. It's positioned as a platform activity to build new business pipeline. Next slide, please. And our mission is very simple: create new business opportunities and options beyond current MCHC group perspective. Our activity centers around these 4 pillars shown here. So from delivering insight, we also create community to really foster new business development and facilitate engagement with startup, and also do investment for option. We expected to create business impact through these activities. Next slide, please. Little about our team. We have 16 members in 3 locations now, Tokyo and Silicon Valley, US, and Germany. And about half members are from external, bringing in experience as entrepreneur, venture capitalist, or CVC background. And the other half members are from various internal business units who knows the culture and people internally to drive engagement. This is the secret source to fill the culture gaps and gain trust and drive partnership, which is critical to facilitate engagement with startups. We now created more than around 200 engagement with startups and working for technology breakthrough, new business development, opportunities, options for future sustainable growth. Next slide, please. We also respect the speed of startup and would like to align with other investors who are supporting the startup. So we built an independent decision-making process for investment. After starting due diligence, we have a track record to reach investment approval in 2 months or so. Next slide, please. Here's our portfolio. We just invested to another startup, so it's total of 6. So the newest one is going to be announced next week, so it's not here. And our theme is to build solution and option for sustainable future. So this is reflected in our decision of investment as well as engagement. We currently have engagement with all of these portfolio companies. And this is very important for our goal to create business in new fields. We continue to actively explore fields of, for example, carbon neutral and sustainability. So yeah, our journey is still ongoing. We are still a young team. We started to have the fund for investment 3 years ago. So yeah, I'm very excited to learn from other peers in the field. So this is it from my side, and I think I'm going to pass over.
Thank you, Fumiko. So my name is Nicolas Sauvage from TDK Ventures. Behind me, you can see our portfolio companies. So we invested in 17 portfolio companies so far. And if you're wondering why there is some golden frame behind me, it's our exit. So we had 2 M&A and 1 IPO so far. Next slide, please. Or is it me who should? No. Okay. So we are technology-focused fund. Our first fund was $50 million. And we just announced our second fund, which is $150 million. So total $200 million funding. Out of the 17 portfolio companies behind me, 15 are from Fund 1. And we still have a reserve for follow-on investment. And then we have made 2 investments from fund number 2. And we invest globally in early stage projects and startups where fundamental material science, which is TDK strong heritage and background, really can add value to the entrepreneurs. Next slide, please. Our investment thesis is simple and yet wide. We are looking for startups that are along the path of a fundamental material science breakthrough and the big mega trends in terms of applications. And we invest in startups that can leverage innovations in fundamental material science to contribute to society for a better planet. Next slide, please. In terms of investment criteria, we are extremely strict. We need 3 at the same time. One is financial returns, which means that when we invest in a startup, we want to be able to think that the investment has the potential to return the fund. This is really tough, but this is part of the discipline on financial side. The second one is strategic value. We want to be able to learn a lot from a space which could be important for TDK's future. And the third one, also extremely important and strict, is about an attractive and sustainable future. Once we have these three criteria met, all at the same time, and that's why you can see the intersection, we are looking for what we call the global king of the hill, the company that is most likely going to win the alpha customers, pivot next, win the beta customers. And if you think about it, VC or CVC is the same thing. We need to find the winners who are going to really have a big impact in the future. And our job is to find this. So far, we've looked at more than 2,300 projects of startups. We invested in 17. So you can see that we say no to 99 plus, for only one we invest out of 100. So this is really where being super strict is really helpful. Next slide, please. So here is where we plan to invest with our second fund. And our second fund is really around 6 very important strategic areas for us. And you can see they're divided between 2 of our investment directors. Andrew looks after clean tech, industrial, and mobility. And Annie looks after materials, energy, and health tech. And I would be amiss if I didn't mention that from the very beginning of starting the TDK Ventures all the way to today, I've been a very happy Orrick customer. With that, I think you're back to Orrick.
Okay, thank you very much, Fumiko-san and Nicolas. That was a great presentation introduction. So I think now we'll turn to panel discussion. So as I just spoke, Joseph Perkins, our Singapore partner, we're going to moderate this discussion. So our 4 years, Joseph.
I'm going to take myself off mute and then talk. So thank you, Nicolas and Fumiko-san, for your introductions. It's great to learn a little bit more about how your CVCs operate. And part of our panel discussion will dig a little bit into how you think about your investments, how you organize yourself. And we certainly encourage the audience members to ask questions to the extent that they relate to something that we're talking about. We'll try to bring the question immediately. If it's a different topic and something that you just want to ask and get out before you forget the question, we'll try to bring those in at the end, okay? So one of the things I'd like to start with, if we rewind the clock back to the point where there was not a TDK Ventures or Mitsubishi CVC, what was the conversation like around the decision to make the CVC? Why make it in the first place? What was the purpose? And we'll go ahead and start. Nicolas, if you can go ahead and go first with that one, and then we'll move over to Fumiko-san.
I think the why for us was about exploration in spaces which are strategic for TDK, but where it's a new market, new applications with technology we may not have. And so it fit a blind spot we had in terms of where disruptions could come from. We have, of course, our business group, very focused on current application, current technology. We have M&A group and R&D group looking at new market with existing technology or new technology in existing markets. But no one had a charter for new technology, new applications. And so the why we wanted to have TDK Ventures and the CVC was for exploration mission, looking into spaces we are not in today and learn as much as possible so that we have an opportunity to sense and smell the disruption 5 years in advance. Because for TDK and many corporations to develop a really good product takes about 3 years, if not 5 years. So to have this kind of early warning system helps you to be early, which means you can be first to market, which means you can actually capture most of the value. So it's not just about creating value, but capturing value.
And Fumiko-san, what about with Mitsubishi? How are you thinking about
Right.
about the formation of the fund?
Yes. So looking back, actually, like we started doing fund investment and exploring engagement with startup from around 2012. So it was maybe not too late, but when we started to have a fund was quite late. It was 2018. So during that time, we were doing more of focusing on engagement or collaboration with startup, try to bridge and match and so on. We did kind of some success cases, some failure cases, but we become very aware that we actually need a scheme to really put this like a mitigate together as a mediator, and also having a fund to support the startup side growth is very important. Another aspect is that our like a kind of industry is very traditional, conventional. So the way of making new business is like building up internal R&D or like swiftly getting some missing piece by M&A. But with this fast changing world, this two kind of method is still very important, significant, but maybe not enough. We have to maybe try more like collaboration, POCs, evaluation, trials with external party, but we didn't have a very good system to do that. So we think that we exist to really kind of speed up working with external startup and try many things out of our comfort zone, and actually having a fund to really kind of like put this together. Our expectation and motivation with our business unit, and the motivation and expectation of the startup to get together is having a team to really facilitate this, and also a fund to really help this lubricate and make the relationship. So we think actually still our goal is to build a business out of this CVC activity, and this is one of the very important method or approach.
So that actually provides a very interesting case study, because I think having that time period where you were just trying to do partnerships without the fund, and then adding the component of the fund in, what did you see changed in the conversations with startup companies after you introduced the fund? Was it easier to get partnerships and collaboration? What other changes might you have seen?
So actually, I joined this company in 2016, and we make this fund in 2018. So I know bits of the former world. And at that time, we were really like just an introducer. So we introduced to the business unit, and kind of that's it, hands off. Actually, many collaboration didn't go through because there's not a view of both sides, which actually be a successful factor to understand both culture, both side interest, and putting this together to really make a win-win partnership or win-win story. And we think that fund is important, but also a people or team to really put this together, the two worlds, because we can say the corporate way of making business and startup way of making business is a different animal. And putting this together is very powerful, but at the same time could be very difficult and challenging.
So do you see your role as having shifted from just doing the introductions to now being more of an ongoing facilitator of conversations, like you're helping throughout the relationship?
Exactly, yes. So we are more on hands-on, and we actually follow up and run together with the business unit and startup. We always in between until it really have a very strong partnership. We will always be there to be the interpreter, translator, facilitator.
Yeah. And Nicolas, what about TDK Ventures? Do you see your role in a similar way, where you're not just doing an investment, but you're kind of taking the hand of your corporate team and the hand of the startup and kind of putting it together until they're holding on to each other?
I think Fumiko said it very well. It's about win-win. And what we're getting better and better over time is to know what the various TDK teams want and care about and wish to learn, and what the startups really care about. And when we identify a win-win, we make the introduction. But we don't do it unless it's a win-win. Otherwise, you see that lose-lose. There's no win-lose. It's always lose-lose if you can't identify the win-win. And that takes a lot of time to really understand what various teams inside TDK really care about. But once you get it, as soon as you find a startup that could be interesting for them, we know they will love the introduction. And like I said, we have very strict financial requirements for making an investment. So most of the startups we see, we won't invest in. But there are many startups that are highly strategic, really good companies, which we still introduce even when we pass the investment. So we invested in 17 portfolio companies, but we have introduced about just over 100 startups that we have met. And so 100 out of 2,300, that gives you a small percentage, but it's still a percentage of startups that are really valuable. And so it's funny because we are just getting on Monday a new joiner in the team whose role is portfolio program manager, which is to be even more proactive in identifying more win-win between startups and the TDK team. So I think we have done a lot of introductions. We have identified a lot of win-win. I think we can do even more than that.
You mentioned something very interesting, which is this learning curve of trying to understand what it is that your corporate team wants and what startups want. For a company that is thinking about launching a fund or a CVC, how much time would you think that they need to get over that learning curve? Is it 6 months, a year, 3 years? Like, how much time did it take TDK Ventures to really feel like it was in its groove?
So I think first, not all CVCs have the same mission. Mm-hmm. So if the mission is business development, then the learning curve is much earlier. You should have it maybe at day one. If it's exploration, you actually don't want too strict a connection because you're looking at betting a future that doesn't exist, which means that you're looking at a future which the business is not working on today. And so what matters is more taking your time to understand what the TDK teams have as current challenges, current constraints, and where they want to go. That's not a discussion that comes from a questionnaire or from a 1 hour call. It's an ongoing discussion. I'll give you an example which is very concrete. We invested in Origin, which is 3D printing for polymer, already acquired by #1 market leader in 3D printing. When we invested, we had many TDK teams getting engaged with the company, having projects with them. But we had one team in Austria, in Europe, telling us, this is really good, but can you find the same in metal? And so we knew they really wanted to do metal. We spent time to understand their requirements. And last month, we announced we invested in Fabric 8. And that's just it took a year to find the companies that really met all the requirements that we believe in the financial, the strategic, sustainability. But once we found it, we are so confident it's going to be a good fit.
Thank you. Thank you. Fumiko-san, what about you? Any recommendations to a company looking to open a fund? How patient do they need to be before they should expect something to come out of those efforts?
I echo with Nicolas that actually every CVC is different and have a different goal or mission. So it's very difficult to say in kind of one shape. So our company, for example, we first look into more on closer to business side, because this is an initiative very new for our company. And our management actually wanted to see what's going to be the result in a shorter term. So we eventually focus on a more closer to the current business, a little bit outside of our active zone. But after doing 3 years, we now have more confidence internally and externally. So we get some trust and also confidence. So now this year, we announced that we're going to expand our fund to 200 million over 10 years. And then part of it is going to be in the white space. So new technology, new market area, because also we want to add a mission to explore a field, which is going to be our new business pipeline in future, but not exist now. And this is more a difficult and long-term vision. So it will take time to reach on kind of internal understanding and consensus where to go, what is the kind of like how to say the area, what's kind of the business model and so on. So it's an exploratory one, and also the business development have a different time frame, I guess. So for the business development, more closer to the current business, understanding the current business strategy will give you some hint and answer. So now then, I think it's going to depend on the size of your company and also area of your business area. So if it's a very, focus on one market field and to help the business development with the CVC fund, I think it's going to be like several months effort to go to this learning curve. But if you have like 20 different business units and 30 different industry to explore, it's going to be like a 3-year project. So it really depends on the strategy of the company, how to utilize the CVC.
So whenever you're investing in a company, or rewind that, when you're working with startups, a lot of them have what's called KPIs, these key product indicators, or these key progress indicators that are used to measure the success of the startup, how they determine whether or not they're doing what they're supposed to be doing. What kind of KPIs or those key progress indicators do you use within your fund? How do you measure your success?
Yeah, this is a very interesting question, and it's kind of, I think, never answered question, or a very difficult question to answer in CVC world. I was working for BSF Venture Capital before Mitsubishi Chemical Holdings, but also at that time, it was always a difficult mission to set as KPI, because in both cases, and especially in Mitsubishi Chemical Holdings, our business, our goal, our ultimate goal is to make a business profit creation. But so the true KPI is going to be additional profit to Mitsubishi Chemical Holdings. But this is impossible to measure accurately, right, because we don't know how much part of CVC contribute that. It will take a long time to create a real business. And also it's going to be, anyway, a combination of many factors. So instead of KPI, in our company, we set a kind of annual monitor index to track the activity, which we believe that these activity will bring to our goal at the end, like the deal flow numbers, how many scouting we do, how many introduction, how many engagements, how many investments. So it's more like a monitor index. And we have a long-term fund expectation. So like for 10 years, how many business we are going to make, new business pipeline, and also how many M&A joint ventures. And of course, as a fund, how's the ROI?
Very interesting. Nicolas, for TDK Ventures, same type of kind of indicators? How are you thinking about your success?
So at very, very high level, our first fund was $50 million. And I used to simplify this goal in a single sentence, which was from this $50 million fund, we need to bring $10 billion revenue per year to TDK, which is basically nearly double TDK. And that's really the raison d'être. We want to be able to give insights into TDK that they can act on, so that they can make the right choice where not to invest and where to invest in a way that it will grow the business. $50 million fund, let's say we do an amazing financial job and we do 10x on the fund, $500 million. That doesn't move the needle for TDK. So this is clearly not about the return on the fund. Now, don't get me wrong. We're not giving quality insights to TDK if we don't bet on the winners, the companies that will shake the industry. So the fund's return, the financial return for me is a perfect proxy to the quality of learnings we bring back to TDK. So having 5x funds return means that our quality of insights was really high versus we just return the fund or we don't even return the fund. Now, that's very high level, and that's something you will measure maybe in 5 or 10 years. I hope 5 years, because I would like to think that we can double TDK's business within 5 years. But along the way, like Fumiko mentioned, you need to have tracking of what could be a good indication of progress. Are you doing a good job? Are you helping your portfolio companies to be more successful? Are you making good investments? All of that really matters. And so our true north, so we have six KPIs, I should do this, 6 KPIs inside TDK Ventures for everyone in the team. And our true north is a net promoter score on the entrepreneurs, where we ask them 1 to 10, how likely would you recommend TDK Ventures to another entrepreneur? So the bar is high, it's from one entrepreneur to another. I'm not going to recommend a VC or CVC that did not help them. And this is our number one, because if we do everything right and we make them more successful, we are going to have a high score. If we are just capital, we are going to disappoint, we are going to have a negative score. And so everything we do is about being entrepreneurs first. And if we do that right, we are going to get more projects coming our way. We are going to be able to invest in the right ones. We are going to learn much more, which means we can steer TDK with really high quality insights versus very poor quality insights.
That seems to me a long view of the investment process and the relationship building that you have to do within the startup ecosystem. Is that, do you view that the same way, that this is a long game strategy versus a short game strategy?
I would even call it a pay forward game. We have coined the term TDK goodness. Some people call it capital plus plus or synergies or so on. We are looking at how we can help entrepreneurs, whether we invest with them or not. How can we help them be more successful? So of course we have the 17 we invested in, we have the 100 we introduced inside TDK, but we also spend a lot of time, and I wrote an article on Medium about it, on how we say no to entrepreneurs, how we say we won't invest in them, and yet we still find ways to help them, to give quality feedback and to help them think about their project. And this pay forward approach, I think, is a winning approach, because it's building our brand that's very consistent with TDK, which still, after 85 years, still see itself as a university spin-off that keeps doing pivot. If you think about TDK, it was a B2B business, moved to B2C with cassette, now back to B2B. And we don't know the next step, what it will be. So this startup mindset of TDK is still anchored in our top management and across TDK. That really helps, because when we talk to entrepreneurs, we really want to help them. And this is back to contributing to society, what TDK is very, very committed to. And entrepreneurs want to contribute to society. And if we make them more successful, even if we don't invest, even if we don't engage with them, it's good for the world. And so this consistency of contributing to society, this TDK goodness, this is not a long-term game. This is really a genuine pay forward, which in turn means that entrepreneurs want to engage with us, even if we don't invest.
Very interesting. And if I may add, very consistent with what I view as the Silicon Valley ethos. I've been to a lot of different ecosystems, startup ecosystems, and Silicon Valley has this way of, I hate to call it free advice, but you go to someone and you talk to them, you almost expect them to cheer you on and to kind of, if they can't help you, to point you in the right direction. So it sounds like TDK Ventures has really found a way to fit into that ecosystem and support it the way that we would expect a high quality investor to support the ecosystem.
And I think it's important because we invest globally, and it should not be only the Silicon Valley entrepreneurs benefiting from this pay forward. I think absolutely. Europe, Israel, China, and all the other countries, they really would value to get better CVCs helping them be more successful.
Awesome. So one of the challenges, I've spoken with a lot of CVCs in Japan, and one of the challenges that I've flagged for CVCs is the speed at which Silicon Valley moves in particular. From the time you sign a term sheet to the time you close a financing can be very, very short. How do you address that from a decision-making process or a delegation process of authority from the parent company down to the CVC? How have you addressed that issue? And maybe we'll go to Fumiko-san first and have her give us some thoughts on how you've approached that.
Sure. So that's a kind of a very important part when we establish our activity and fund. So we know if we are going to do investment in more than million, then it's going to be like a half-year project in a usual approval system. So it's one of the things that we really, really carefully designed, that we have an independent decision-making system for investment. So there is a smaller number of decision makers in the process, and it's very straightforward. There is like just 2 meetings to make investment decision, but of course we have to do due diligence to make sure that we really going to, when you invest into the startup, the strategic return may come back earlier, but we're going to stay with this startup for several years, or in material company, may sometimes like 7 to 10 years. So we want to make sure that we really have a good fit. We really trust each other and have a, kind of chemical reaction with this company. And also they have a business model that they can exit. And also we can support that. That's important part, that we, as a financial investor, our money is maybe too small to make the startup successful. But we think that we can help the startup in a various way more on the business side. So we want to make sure that we can contribute to the company's growth and exit. And all these parts fit together. Our decision is very fast because we don't exactly need business unit endorsement. But we want to make sure that this company and our company have a thing to catalyze together. And then we can really build a win-win story to fulfill both goals. We also have a mission of realizing kaiteki. Kaiteki is a thing that let's do good thing for the people, society, and the earth. And it's really linked to the sustainability. I think that many startup companies we work with resonate in this vision in various ways. Even the path is different. We're going to the same goal, and we can help each other to go that. So one thing from the past company I was in until this company, decision-making system, to make it as much as simple, straightforward, is one very important part to make the CVC successful. We still have the headquarters, our mothership company, my boss is the CTO of the company, and he is in this investment committee. So of course, the mothership the strategy kicks in, but we have a very small number of people to make decisions. So we can move it very fast and match with the speed of a startup and investors who are supporting that. And also that's also linked to the reputation that Nicolas mentioned. We think that's very important. So
absolutely. Absolutely. It's hard to describe how much the reputation of an investor through one investment can permeate the ecosystem and inform other entrepreneurs about, this investor was super supportive, or this investor was really slow and it was a painful process to get the money in the door. And all of this back channel information spreads very quickly. So it's critical that as you've been able to do, it seems to be able to move quickly and work with the companies. Exactly. Nicolas, have you found something similar in TDK Ventures? Have you been able to optimize for speed? And if so, how?
First, I will agree with Fumiko. And I say Fumiko because she agreed I can call her Fumiko. I want to be clear to the audience. I'm not disrespectful. I think reputation is key. And I think in CVC or VC, the sentence, it takes decades to build a reputation and a few minutes to destroy it, is so true. There is no, especially for CVC, there is no benefit of the doubt. So I want to really caution that reputation is everything, which means that in your design of the CVC and how you act and how you stay consistent with it really matters. And consistency really matters. And this is really hard because CVCs still are linked to a mothership that can change over time. The CEO can change, the investment committee can change, and so on. So you need to find a way where it's going to stay stable despite changes in the mothership. My view on CVC, and it's true for VCs, is on speed. Is you need to be able to move very fast, but you also need to be able to take your time. And the best VCs or CVCs are the ones who know when to go fast and when to take your time. When it comes to going fast, we designed TDK Ventures to be extremely fast. And I just talk about fact, and then I will say what we did for the design. If I look at Grok, which is this company that does compute for inferences AI, from the first meeting with the CEO to everything signed and the money transferred was 25 days. Echo, which is this company that is doing super well and just raised another round, from the very first meeting with the company to transferring the money, everything signed was 5 weeks. And how we did it was we made the investment committee constraint of 3 people, all in the same time zone. And I remember people saying, why 1 time zone? We could do 2 time zones. And I said, no, I'm the second time zone. and it sounds like a detail, but it's a really important point, which is we can call the investment committee at very short notice. We don't need to worry about 3 time zones where it becomes really hard to juggle with different schedules. And 3 means that it's 2 votes out of 3, which makes it also easier and quicker to get approval. We don't need champions to support an investment proposal. Again, this is consistent with an exploration mission. If you are on a business development mission, that would be different, but exploration makes sense not to need this championship. And then maybe a detail, but I don't think it is, we only meet the investment committee when we have an investment proposal, which means we keep it exciting for the investment committee. When we call them, they want to join, they want to know what we are going to propose, they know they're going to make a decision. So we never call the investment committee just to share an update or to show what we're thinking about investing. It's a single meeting, we show what we want to invest. And of course, we did a long due diligence before, really deep. And then they say yes or no, and they vote or not. And that I think has helped us to get the investment committee really excited about what we do.
If I may, how are you able to actually convince the mothership companies or kind of the people to kind of adopt such a very different like a decision-making process? Because especially because TDK and Mitsubishi are both very well established long-time company in Japan, and they must have a very robust internal approval process already. So kind of it's already, to me, it's like I just transfer the shoes, but it's like a culture shock already. If they face this, but it sounds like both of TDK Ventures and Mitsubishi Chemical Group were able to adopt such a very different decision-making process from the beginning. So I just want to know, I don't know, is there any kind of very supportive officer on the mothership who drive the process, or how did it work?
So if I can start, I would say that I defined the constraint, which was 3 people in the investment committee, 1 time zone. But I said you can choose anyone you want. And what that meant is we ended up with 3 corporate officers, basically the equivalent of CSO, Chief Strategy Officer equivalent, the CFO, the CTO. So in a way, we could not ask for a better investment committee because they really are the proxy of TDK strategy. So by giving this constraint and by explaining this is part of the design to be able to move fast, what I ended up with was a perfect investment committee. Part of the design is I also report to the Ishiguro-san, the CEO of TDK. And now, Sugita-san, you're talking about something really important is how do you get a design that works for your mothership? And what we started with was maximum check size of about 2.5 million, which was basically the delegation from the CEO to the investment committee. What we did afterwards, and we just finished the approval earlier this year, is we went to the board of directors of TDK and asked for a higher delegation. But we could show that it was working already. So we asked for a higher delegation of $5 million check size. And we also created what we call an expedited investment committee, which can do investment up to 1.5 million. And the rationale for this was not because the investment committee was slow. It was super fast. It's just that I was aware we were taking the time of 3 corporate officers very high up in TDK. And I wanted to only get their time for what really was a big investment. And the smaller follow investments or smaller investments check size would be delegated closer to the TDK Ventures team. So there are ways where you can be flexible with what is the approval inside the company and find the right delegation where it works for your company. And I think in Japan, you can be very smart in making it work fast as long as you think about delegation of power.
Yeah, I think a little bit similar thing with Nicolas. So we actually make it very clear at the beginning when we design the fund that it have to have a different decision-making system. And to make it comfortable with the company, we also make a cap. So yearly cap, how much is going to be decided in this decision-making system. And also at the end, we're having an investment committee member, a CTO and CSO, the strategy officer, and the head of the venture office, which is myself. So it's kind of very simple, but we try to make it comfortable with the company. That was the key concern point, was the maximum threshold for our company. So we make the cap for that. We didn't make a cap for each investment though. So the yearly cap for how many companies we invested in, like before it was 10 million and currently it's 20 million is the cap. After getting some more trust inside the company, we also increased the threshold, but that was most important. We are going to take, the management decided we are okay to take a risk of this kind of maximum yearly fund like commitment. But if it is going to be beyond that, we have to go to the conventional process. So I think there is some way to really kind of find the place which is comfortable, but also be very firm about what is important and to keep the reputation in the startup ecosystem. Because if we fail in the beginning, we are not having a chance. So that was very important design in the very beginning. We also use a lot of external examples, successful example, failure example, and so on to convince our management.
Oh,
that was very powerful.
Interesting. But sounds like, actually your internal approval process is also evolving, right? Because you may have started with a small cap, but, because, after kind of running the fund for several years, I guess, that, you get more trust from the management. So that's why, you have more like, you're lifting the cap amount, also you're expanding the, kind of the fund size, etc. So it sounds like, this kind of, so that now you can have, you can just invest more. And so it's like also a continuous kind of conversation with the management.
I think that is also one of the learning curve.
Mm-hmm.
Yes. So, and also seeing the other players, other CVC in the world, it's like we are just going a little bit closer to the standard. So we are never exceeding the standard so far. So I think it's kind of the learning curve. This is a natural thing happening in the world of the CVC, global CVCs.
I think the key word is trust. And you should not try to go too fast. You just show that you deliver what you said you would deliver. Just for the small story, when I proposed the first fund to TDK management of $50 million, I remember being asked, why 50 million? Why not more? This looks small. And my response was, let's walk before we run. And the point is, I think it's better to take it slow first, show that you're making the progress you said you would do and bring the value. And then you can ask for more funds, you can ask for more delegation, you can ask for more teams and so on. So if you go too fast early and then you make one mistake, this is it. So you really should think about how quick you can go. And of course, you can be ambitious and want to go fast, but think about steps.
I see. Wow.
So let's kind of forward the clock a little bit. You've had that conversation with the parent company. They've said, yes, let's form a fund. The money's in the company. You've got your committee set up. You're ready to go. Now you have to find a place to put the money or find companies to invest in. Where do you find these companies? How is it that you're able to identify so many companies? First off, 2,000 is a great number. Where do you go to find the companies, and how do you perpetuate that? Like, where are you looking?
Maybe I would react first about putting the money to work. That's a wrong way of thinking about it. And I'm being cheeky, but it's not because you have the money you should invest it. You have the money, and this is great, but you should only invest when it's really, really strong reasons to invest. And so what we do is we do capital calls. So we don't get all the money right away, which is also good for the board of directors of the company to understand that even though it's a $200 million asset under management, we are not asking for that money right away, but we are showing when we are likely going to ask over time. And that's also why, so we had this discussion about annual cap, and I pushed against it because I felt like this would give a temptation for my team to think that they have to spend that much every year because that's our cap. And I have no KPI about number of investments. If anything, I actually rewarded my team in terms of bonus for having done a really good due diligence and still decided not to invest. And this is a much more courageous step than decide to invest when there is something nagging. Now, back to your question, Joseph, about where do we find these startups? I have a secret to say, which is that I was sure we would get a lot of startups coming our way because of TDK brand, because of working with different partners, but I have no proof to this. I could not prove it. So I had my confidence and my confidence alone, but I could not prove that we would get a lot of projects coming our way. And I think the secret power, which is not so secret power of CVCs, is a mothership. And so my advice to everyone listening is make sure that when you design your CVC, you really think about leveraging your mothership. Don't feel you're constrained by your mothership. This is your superpower. This is what financial VC wish they had. They wish they had worldwide expert access. They wish they had go-to-market for the startups they want to invest. They wish they could provide pilots and so on. So think about how you can leverage your CVC. The number of projects coming your way will follow.
Yeah.
And for Fumiko-san, how do you think about it?
Yeah, I was kind of listening to Nicolas' story and kind of cannot agree more. Yeah, I think your question was about the deal flow and also how we find the lead. And
That's right.
Actually, when we set up our team, we tried to expand our deal flow. So we did. We already had a fund investment, venture capital fund investment, and we also have a lot of connections. We hire a PE person in Silicon Valley who have 30 years experience. So he is a person already inside the network, so he always bring in quality deals. We also be a sponsor of incubators and so on. So we try to expand the income of the deals, because we thought also that's important. We are having a shower of the deals that we can also learn and educate ourselves. But there's I think mainly two ways, because our activity, like more than half, really connected to business development. So we have we receive or we understand the gap in the strategy from the business unit, and then we go out and find the company really kind of fit into to close this gap. So this is a place that we really proactively go outside. And this is, I think, lead to two investments. We also do accelerator programs. We're actually running now the program in circular economy. And this is also a very interesting program because it's like a co-creation. We not only drag many startup company into the program, but also many business unit people are grabbed into this program, and they work together with startups. So this kind of like a targeted, proactive deal sourcing result in some investment. But as a beginning, actually many deals come from network, so more opportunistically. So if you have a network and you hear about a very interesting opportunities, and then we find what's the fit to our company. So it's more that opportunistic, but there's a lot of quality deals. So high quality, but we have to find a fit or strategic pieces we can contribute to the startup. And this lead to, I think, like 3 investment. So I think, and actually also we start to have some inbound deal. So this is also, I think, same with Nicolas, because of TDK brand or because of Mitsubishi Chemical Holdings brand. And also with our investment, people start to know we are doing this activity, and people start to come with us with their proposal. And this is also start to be quite interesting. So I think there are several ways, but in the beginning for us was having a quality network and having opportunistic but very high quality deal result in investment at the beginning, and then it start to roll from there.
Yeah.
Business unit also was skeptical first to give everything to us, because they have their strategy and they are saying that really startup can help me. I'm not sure. Let me monitor. But yeah, they start seeing some kind of new collaboration emerging. Then they said, okay, why not we try this? So people start hopping on the boat.
So I think that goes back to Nicolas' comment before about reputation and really getting yourself into the ecosystem where people think of you when they think of their friends and their other entrepreneur friends, of who to refer them to.
Yeah.
So I've been told that we have 15 minutes left. And so I want to just flag that for our attendees so that if you have a question, you can remember to ask it. I still have lots of questions, and I don't think we're going to get through them all in 15 minutes. So if you do have a question, go ahead and post it. We'll continue to the panel for another 15 minutes. Let's pretend for a moment that you are introduced to someone who's going to take your place, right, in your position. And you have just a very short amount of time to mentor them and teach them. What would you tell them about what it is you do and how to do it well? What's your advice to them?
So one thing we've done after 2 years of running the business is define our core values. And we call them code of conduct because of the CODE. C is contributing to society. O is one team reaching for the sky. D is delivering deep insight, which is a raison d'être of TDK Ventures. And E is entrepreneurs first. And what I would say is we keep living and breathing these core values in everything we do and how we refine our processes. So if someone was to replace me, I would say listen to the team, because you're going to see how we live through these values and how we've been successful because we keep being consistent with these values.
Thank you. Fumiko-san, any thoughts of what you would tell someone who is, how you would mentor someone who is kind of stepping into your role?
Right. So that's kind of very interesting question. I was thinking like the time I started. So when I started, 2008 is the time I started this activity. And I was really excited because I am a technology lover. So start to learn so many things about new technology, new innovation. I was so excited. I think, but the tendency of a person who interested in this work from the corporate side, many times technology lover. And my advice, very kind of maybe basic one, is it's not about the technology actually. What is amazing? It's really what is amazing is that kind of extraordinary people are building innovation from scratch, and it's about the team. It's about the kind of the path that never straight. They have to pivot and go through. So the path to success is always not straight. So, and I think there is one kind of failure I done in the past is that I just believe the entrepreneur's word and never really kind of force myself to see what's happening. So don't believe the words, believe what you see, believe what you really sometimes touch or sense and so on. But yeah, that's a kind of thing, as a basic thing. You can be excited and kind of lost in the pathway. But as a team, I think it's really our value to the ecosystem. I feel we can bring different value to the startup ecosystem than the financial investors, and also different from startup. So also think about what value we can bring into the ecosystem, and there are many we can do actually. So
that actually goes right into another question I had, which is how do you see CVCs fitting into the entrepreneur ecosystem? Like what role should they be playing? And how does that tie into the role that you play in the overall corporate structure that you're operating in? Like, are they at odds with each other, or are they symbiotic? Do they help each other, or both?
Right. So I definitely believe that, like in my area, like a material or healthcare or recently sustainability area, any startup eventually have to work with the real player in the world to really like scale up or really adapt their technology into the real world and start to really make a solution. So eventually, I think that's the role of a large corporate to support, to kind of scale up and also fine tune to fit into the real world problem, and then bring it together. Because so maybe I will tell like one of our portfolio company that we work with, Adifab. It's a 3D printing company. And we actually, after we investment, we are helping them like making their material, 3D printing material, more robust and also able to scale up and safer and also match to every region's registration. At the same time, we are promoting together to the large player like automotive or medical and so on together. And our brand name is also helping to open the door with us, because many of them are already our customer, but not for the startup. And actually, these customers don't want just one solution. They want a combination of solution. So our solution together with that startup solution actually give a comprehensive solution to the customer. And I think that's how we work together when we really go to the market, and how we can help the startup. Like other financial investor cannot do. And I think that's where how we are valued by the startup and also the other financial players.
Thank you.
I think I will continue with the analogy of superpower. If you think about the CEO of a startup, the most important decision he can make is to get the right Avengers working with him. And that means identifying different superpowers for the investors, for the team he's building, and so on. And your job as a CVC is to be very clear about your superpower and make it stronger and stronger and stronger every year. And so you want to be, I don't know if you want to be Captain America or another Avenger, but think about the superpower, because if you want to help entrepreneurs, it's not by being one without superpower. And financial VC have their superpowers. Maybe it's an amazing network. Maybe they know how to raise a second round of funding and so on. A CVC by default should have a superpower. And so if you think about the entrepreneurs, it's about getting this beautiful justice league that will help him in different places. And if I give an example, we have Span.io, which is the new generation of electrical panel, which has not been changed for a century. And they are now thinking about how to add data at the electrical panel level. We can bring a lot of value in terms of understanding of energy and components and so on. That's one of our superpowers. But we have Munich Re Ventures, which is a famous reinsurance company that joined as an investor because they understand data and monetization of the data for insurance purpose. You can see how different superpower will help Span be even more successful.
Interesting. I like that. I'll get to be Captain America, and you can be Thor. So, with your CVC, you're operating in a variety of jurisdictions. It's not, as you said, just in Silicon Valley. You're operating in Europe. You're operating in the U.S. and other areas. How do you manage the process of doing these investments across such a wide geography? Operationally, it's got to be very taxing, but also the different laws and the different regulations that apply to those. How do you navigate that?
Maybe I can start, and I also forgot to maybe mention that in the beginning, but we are working with all the deal with Orrick for the legal part of the due diligence. And that have a reason. We run a global investment, and we actually have mostly all the same process. So only the difference is Japanese investment. So we have a little bit different decision makers, but the process is same globally. But each country, as you mentioned, has different culture or rules or regulations. So we rely on local members inside our company, and for externally, we want to work with local legal office because local knowledge and experience matters. And the reason we come back to why we work with Orrick is because Orrick has coverage of many countries and also know very well about the local, registration, legal, and also rules and culture. It is very time consuming to find a local service partner and build working relationship in a new country. So it is highly recommended to build a relationship with a legal office as a external partner, which has coverage in your key countries. And that is why we choose Orrick. Maybe some people have different also partners, but having a kind of coverage in your key countries is, I think, very important for consideration.
Yeah, I fully echo everything Fumiko said. If I look at our experience, we invested, of course, in the US. We invested in Israel, where the law is very different. We invested in China, where the construction was extremely different, with two different companies that at some point would merge and all of that. you absolutely need good legal advice, and that doesn't come from your in-house legal team. They would never have seen it. So, and it's not just never seen it. I think when you look at term sheets, to know what is market or not market is a difference between you could lose your reputation or you don't. So you don't want to leave it to someone who wants to help out from inside your mothership. You actually really want to get the advice for people who have seen so many term sheets that they have a good view about what is market or not market.
And just for clarity, I didn't pay either of them to say any of this about Orrick, so I appreciate the compliments.
No, I mean, the 100% discount you offered was good.
Thank you very much.
So any tips about managing local counsel, right? So you've probably worked with counsel like in Israel or in China, in the United States. Any thoughts about how to manage that relationship to make sure that you're getting out of local counsel what you need?
So the one thing we did, which I think is very useful, is we identified 5 levels of due diligence. And level 1 would be very simple due diligence. Maybe it's a follow investment. We are very confident about the company. It's just to make sure that there is no mistakes in the agreement we are going to sign. Yeah. And level 5, like the one we did in Israel or in China and some we did in the US, we really want to be very thorough. We may be the co-lead investor. We are making a big check size. We want to make sure that we are well protected, still market terms, but we want to make sure we are well protected. We don't put risk for our money or our reputation. And to have this 1 to 5 level of due diligence was really helpful. 1, control the cost, and to make sure the cost is proportional to the value of the investment. If we make a very small follow investment, even if it's risky, it's not worth spending too much time on it. But if we make our biggest check size in something that's very different, you actually want to have a really high quality due diligence. So that would be the advice that I would recommend to follow.
That's great advice. Fumiko-san, any thoughts on managing local counsel or other service providers?
I think actually what Nicolas said with kind of reflect to ours. So we have a deal that we lead, and we have a deal that we kind of more follow. So of course, in that kind of context, how much legal service we need will be different. And also this many times also associated with the size of the investment. And also with our partners. So sometimes our syndicate financial partner is already doing a very thorough legal due diligence, and we share each other that, then that's another thing that we also have a lighter due diligence on our side. So it's also sometimes case by case. But yes, actually having a legal check from external party is very important because our internal experience for doing this execution is not so many as the legal partner external. So I fully, agree with Nicolas what he says.
Well, we are at the tail end of this panel discussion. It is almost time to turn it off, but I wanted to thank both of our panelists and also to give you one last chance to share some comments or insights. There's a lot of people on this in the attendee list who are at corporations, who are thinking about CVCs. Anything that you would like to share with your colleagues, give you that chance now before we turn it off. And Fumiko-san, we'll go ahead and start with you and then Nicolas.
Yeah, sure. So actually, I think that how to design CVC is really, really different from company to company and depends on company strategy. So I think resonate with the company strategy is important, but also I'm very happy to help any other CVC peer to make a very good proposal. And I have been in this world for certain time. So I know some successful cases and failure cases that maybe help to convince your management. So I'm very happy to support anybody who is considering that. I'm open for contact and support. So be free to contact me.
Thank you so much, Fumiko-san. That's very generous.
So I'm going to cheat. I just sent a number of articles I wrote on Medium, so at least I have more tips that are shared to everyone in the attendance. I think my advice, if I make it super simple, is think about your why, think about your superpower. And these two should drive everything in your design.
Thank you. Hiroki, anything else to add to?
No, it's been a
things
great
up?
presentation discussion. It's okay. To be honest, it's a good opportunity also for us to learn, how our clients are thinking about, we can actually, which will help us better, going forward.
Absolutely. Well, maybe we'll have a follow-on discussion at some point, since I only got through about half of the questions I was intending to ask. Thank you so much, Fumiko-san and Nicolas, for the wonderful discussion and all the insights that you brought. And thank you to the attendees as well for your time and attention. This will be available online afterwards. So if you want to share it with your friends, if you want to review any portion of this, and then if you do need Fumiko-san's contact information or Nicolas' Medium address, we're happy to provide that as well. All right. Thank you, everyone. Have a great day.
Thank you. Bye-bye.